Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers pushed ES up to 2014.5, and then from there, ES just started bouncing within a range. Overall, we know that buyers are in control and can maintain that control as long as ES holds above 2000, 2002 on the day time frame. We don't really have any major economic catalyst to serve as a driver for a big trending move even on the day time frame today, especially earlier in the morning, given the quadruple witching, options expiration. We just have to be a little bit more careful because, we have seen directional moves even on options expiration day, quadruple witching, but typically they happen later in the day. And, the mornings are usually pretty two-sided. Now, in this environment, we know that the buy side is firmly in control, and until we break the 2000 level, I think the easier trades are going to be buying pullbacks into support. Now, as far as the trade management goes, we still have to be aware of the option expiration, the probability of chop, and read the market in real time to figure out whether it makes sense to really hold the trade, or if it's a bit choppy here, maybe get a better price. That's of course all going to come down to execution, but contextually, the buy side is very much in control above 2000 and 2002, and especially above the 0675 to 0775 support zone, which was established in the overnight session. Looking at the other markets, they're looking fairly strong. NQ made a new high on the year, and TF is attempting to catch up to the other markets. It's still pretty far back compared to ES and NQ, but it's attempting at least to catch up, which is good. We don't really want to see any major weakness in TF if these other markets are going to hold up and maintain the short-term strength that we're seeing in the market here. So the strategy for this morning is going to be focused more on buying pullbacks into support. It doesn't mean that there can't be a short setup spotted in real time, but I think that when you're in a bullish environment, you do want to keep most of your focus in the direction of that trend, especially when the market is just breaking out of a established balance area, and there's some decent momentum on the upside. Because in those environments, what we find is that the short trade setups typically don't provide a whole lot of profit potential, and they're more difficult to actually execute. You're kind of going against the trend at that point and against the flow, and shorting a market like that, it doesn't mean that the setups can't work, but it just requires more skill, and it just requires entries, re-entries, managing risk a bit more closely, and it's tougher to hold those trades too, right? So in hindsight, a short setup might look great even in an overall bullish environment, but in real time, it's difficult to actually hold that short setup to its intended target, because every pullback typically will attract buyers in the market, right? So it's going to be a difficult trade to actually get to the target anyway, and for that reason, if you want to keep things simple, it's probably better to just skip the short trades for now, and just focus on the buy side and look for pullbacks into support. Look for even intraday setups back into support zones established intraday. If you see the market balancing and the market is pulling back to like a range low or a balance area low intraday, that itself can serve as a long setup. Now, with option expiration, we do have to be a little bit careful because we're trading at these elevated prices here, and you want to make sure that when you're taking a long setup at an aggressive price, that you still have enough room to the next target, right? And that the reward to risk still makes sense. Otherwise, just sit out and wait for that good setup to present itself, and don't really force it, especially on a day like today. But from a market context perspective, we're going to focus on more long setups, and I think those are going to be conservative trades on the day time frame. Is just look for pullbacks, and then for exits, keep an eye on TF, because NQ is making new highs on the year, but TF still has some decent amount of catch up to do. So what's going to happen is that TF still has these pockets of resistance on the way up, and you can time your exits in the S&P by looking at TF and seeing when TF is hitting some decent resistance spot on the way up. So as an example, let's say TF breaks out above its overnight high and above 1161. The next area where there's some short-term resistance is right around the 1165 half to 1166 half, and then beyond that it's around 1170, right? 1169.5 to 1170.5. So as TF pushes into those zones, that can be a good trigger to take profit in the S&P, because as TF hits resistance, we can get rotation in the S&P. So that's another thing to keep in mind. If you do watch TF intraday, then you can use it to time the exits in the S&P, because ES is hitting all-time highs, so there is no real hard resistance up here, right? I mean, the 10-quarter, 12-quarter zone was established overnight. Beyond that, we have the overnight high at 14.5, and so we have 14-quarter to 16-quarter as resistance, with the idea being that even if we do continue heading higher, it's not going to be a trending type move, and we can still get sellers and some profit taking at the overnight high. In the event of a breakout above initial resistance, 20.5 to 22.5 can be a range extreme, and it can cap the upside on the day time frame. So heading into the morning, expecting the buy side to maintain control, but that doesn't mean that we can't get a pullback to 0675 or down to 03 to 04 half. Now this support area down here, really this whole zone 2000 and 2004 half is support, right? But we are going to treat these as two distinct support zones, 03 to 04 half and 2000 to 2002. And as far as how this gets traded, that is going to have to be determined in real time. And I think it's worth it to buy both of these zones first time down, because the probability of 2000 breaking today is relatively low. So and it might not even get down to 2000 or 2002. And for that reason, it makes sense that if the market comes down to 03 to 04 half, it makes sense to attempt a long setup there. And if that doesn't work, then take an independent long setup at 2000 or 2002 as well. And if that one still doesn't work, then we'll have to reassess and reestablish our bias. But as long as the 2000 level holds, I think the upside is still going to be okay, and buyers can still maintain control. And we could quite easily just range between pre-market support down at 03 to 04 half up towards the overnight highs, and potentially even higher. So those are the main thoughts heading into the open. Let's see how well the buyers can hold it up, and we'll take it from there.